Good morning, everybody, and this is your S&P 500 setups for today. So, the Feds have come out and said they're expecting 3 rate cuts this year, and obviously the market responded fairly positively to that. Now, we have broken through that level that we were talking about at 51.96, and we've actually hammered through it. A big solid bar. Could also see that as an exhaustion bar when you look at the oscillators here and you look at the daily. We've just sort of crossed over on the oscillators pointing up. Trend is strong, and as we've been saying for quite some time, you don't want to be going against the trend. So the noise is out the way. Now what we're looking for is opportunities, and those opportunities are to the upside right now. And when we drill down through the time frames, we're going to have to wait for a pullback. We've had a strong move up, and now we've sort of spiked and we're going into a channel or a flag. So you would expect some kind of reset, maybe not down to 51,100 area, or 5200 area, but definitely reject 5250 because it's been moving in 50-point increments. Find a base somewhere and then move off that. So what we need to do is find where the most logical area is for the base. And if you look at the hour, there isn't one. And obviously there's nothing to the left because we're all-time highs now. So what you'd be looking for is something on the lower time frames, and this is going to be a difficult setup. Right, so the most logical one at the moment is going to be here, 52.34, but that may not materialize. So what you need to do is wait for, I won't say market open, but you can probably pick it up during the European session as well. Either treat this as the range, and that is between 52.50 and 52.44. So I think 52.50 would probably be the right thing to look at. Get a move going up, pull back, find support here. That gives you the opportunity to buy with a very tight stop loss of around 100 points, just below the low of the current low of the day. So that's what I'd be looking for. If it does drop lower, this would be an interesting area. That's 52.34. Just bear in mind you do have gaps to the downside, and you've got a bit of confusion here as well. But I think that's just based on algorithms trying to intersect what the Feds were saying in their interview after their meeting. So yeah, looking to buy, I think the strongest way is to pick up this level at one of these two levels. So either find support at 52.44 or a little bit of move higher on 52.50, pull back and come and test it. And for me, it's a public holiday in South Africa, so I can probably pay attention to the 5-minute because I've got nothing better to do. And so 52.48 is also a level that I would be looking for. So that's kind of my view. And don't forget these levels all the way down below us at 52.12, 5200. That could I've seen it before, you just drift down there, then the market opens and then it hammers on up again. So that's still likely, but I think this is the zone you need to pay attention to. 52.44 and as far down as 52.34. You're looking for some kind of a base in here before getting in on it. So pay attention to it. It's definitely onwards and upwards. We are overbought. We've been extended for quite some time, but I think at the moment, if you look at that, that could be an exhaustion bar, but based on what the Feds have said,